Hello everyone, it's Jeb Hanwerger from GoldStockTrades.com. Today's Friday, December 14th. It's about midday in the trading session, and I wanted to update you on some important developments that are taking place in the gold market, in the stock market, and in some of the currency markets this as we close up 2018. So looking at 2018, first big chart to look at, we're looking at the gold on a weekly basis. And so we're here looking at gold on the weekly basis. And if you notice here at the end of December last year, we had a rally up to the 1360 area, which then failed. And we had selling that came in from pretty much April through the middle of August, and that selling exhausted. It was pretty much straight liquidation of gold. This was a failed breakout at 1360. If that broke out there, that would have been 5 years highs. And the bulls got caught here. We got a vicious sell-off without any buying. And really what caused the sell-off in 2018 is the strength and the liquidity of the U.S. dollar. We had a lot of currencies, including the yuan, the Chinese yuan, that have depreciated in the euro. And in the United States, we've been raising interest rates, so the dollar has had very strong rally in 2018. Investors have gone from stocks and bonds into dollar. There's been a risk off. So that has not been good in terms of gold denominated in US dollars. But if you look at gold and other currencies, you'll see a much different picture. But looking at gold and US dollars, which is very important from a technical perspective, we have had a rally since this is selling exhaustion in August, and then we had an inside bar day. And we had the break above the 10-week moving average or the 50-day moving average in October, which I highlighted to you. And since then, we've seen the 10-week moving average beginning to curve upwards and a test of the 200-day moving average. Now, the 200-day moving average, because of the sell-off, is still declining. So this may act as resistance, this 1256. But if it can close above the 200-day moving average, that would be very significant. It has not done that. Closed above the 40-week moving average since the end of 2017. And would like to see the long-term uptrend move higher. And that would cause a lot of investors that have been moving from the stock market into U.S. dollars to possibly go from the U.S. dollars, which looks a little toppy now and overvalued, into gold, which may be just turning into a bull market. But the key here is we're looking at this 40-week moving average very close here, 1256, 1257. Next week is going to be an important week for the gold market and how it interacts with this long-term 40-week, 200-day moving average. So here, taking a chart here of the U.S. dollar, was in a very significant downtrend, hitting 3-year lows. Gold was looking to break out into 5-year highs. And then all of a sudden, we had this reversal in April, and the dollar strengthened. And the talk of the trade wars caused this anxiety of investors dumping other currencies into the dollar. So we've had a counter-trend rally in the dollar, in the U.S. dollar, pretty much all of 2018, which has put the lid on gold and precious metals and commodities for 2018. But this is just, I believe, a counter-trend rally, and it's beginning to look a little toppy, and the momentum could be turning over soon. That could bring money back into gold and into silver. But from a weekly perspective, the 50-day and the 200-day moving average in the U.S. dollar is still higher. and it still remains above the 50-day and the 200-day. So we've had a strong market in the U.S. dollar. Clearly, from a technical perspective, investors are cash is king right now. And that's affecting the precious metals and the commodity space, and that's why all the venture is as low as it is where it is today. Everything looked great for the venture going into 2018. It looked like we had a bullish crossover. It looked like we were finally able to regain maybe the 1,000 level, which is a critical juncture for the TSX venture. That's where the venture started at. Instead, we got a huge bearish reversal and a huge sell-off and liquidation event for 2018, possibly because of the strong dollar. And we've seen here pretty much 2018, other than maybe 1 week, 2 weeks, 3 weeks, has been nonstop selling. And you see here we're at an extremely oversold level. So it has been 2018. You could pretty much call for the TSX venture as the year of nonstop selling. So now the regulators are looking at this because it's not much of a market here in the TSX venture. It's just pretty much nonstop selling, and that could be because of the strengthening U.S. dollar. That could be because of many other macro factors, but there seems to be something more that meets the eye. Gold still, if you look at gold in terms of Canadian dollars, so here's a chart of gold in Canadian dollars, 1665.87. So that's not bad. We've had a bottom here in August, double bottom here. So it looks pretty strong. And we've crossed the 40-week 200-day in terms of Canadian dollars. And we may get a golden crossover. And the 200-day, which was declining for most of 2018 since the second half, if it stays above the 200-day moving average, and we see some technical strength here, this could be turning in terms of gold and Canadian dollars. And the Canadian market's very interesting because, finally we're beginning to see the real estate slowing in the Canadian markets, especially in Toronto, and that may spread soon to Vancouver. So take a look at gold in terms of Canadian dollars, not just in terms of U.S. dollars. So 1665 an ounce, that should really support a better venture market and a better junior mining market. And unfortunately, due to some predatory lending practices and distressed markets since 2008, since the credit crisis, there has not been a good form of financing and equity investments and equity investors, long-term investors. It's very difficult for the companies, the junior mining companies, to discover and find new ounces and fund exploration and development. But this market, 1665, the copper market is still, the copper market, it's still pretty high. For the venture is still priced at when copper was below $1, and copper is almost $3. So there's something that needs to be addressed. Investors need to address this because this is going to create an even bigger crisis going forward, because exploration funding and development funding has really screeched to a halt compared to prior years and decades when there was money to be found for exploration and development. That has really dried up, and that could be causing a crisis for the mid-tier producers and the majors, who I've seen this week make some strategic investments into some exploration juniors. So we may be approaching a bottom soon in this market, but the U.S. dollar is still technically strong, moving higher, and until then it's going to be quite painful. But it's beginning to look toppy. and the gold market is looking like it's beginning to turn around. So maybe we'll see this move and safe haven move from the dollar to precious metals. And I remember seeing this in the past when gold has rallied, that sometimes when there's a sell-off, it first goes to the dollar gets a boost, and then in time, the gold market gets a boost. So stay tuned. Only 2 more weeks of tax loss selling, and then I expect to see some real interest coming back into the beaten down junior miners that are trading for pretty much pennies on the dollar right now. After going through many of these boom and bust cycles, it's really important for investors to remember not to get caught up with the panic, not to get caught up with the depression, not to get caught up with the negativity during these holidays. The dawn comes right after the darkness. We've been here before. Yes, it's not easy. It's painful. This has been a painful year, like 2015, like 1999. This has been a painful time, but we've been here before, and we know that just as difficult as it may be, tomorrow or the next week may be the start of a very powerful rally off of these lows, because I see so many opportunities for investors who have cash to be able to pick up really great opportunities in the mining sector. A lot of the promoters and the valuation have moved into cannabis, went into crypto, now it's cannabis. It went to crypto stocks, now it's cannabis stocks. A lot of the fluff, a lot of the promo has gone into other areas. And that's why you see the shorts are beginning to attack the overvalued areas. Soon they're going to leave the gold sector, because it's already down to, many of these things are trading below book value. And they're going to attack the overvalued sectors. And they're going to buy, the shorts are going to buy the cheap discounted sectors. So that's where we're at. And that's why I think that this is the wrong time to panic and to get caught up. But that, especially when you start seeing, now the regulators are finally taking action on the venture, and they're finally, now is not the time. This is the point of extreme negativity. People are fighting with each other, investors. This is all the hallmark of capitulation, of blood in the streets. Please do not panic. Stay positive, and a turn might be just around the corner. Stay tuned to goldstocktrades.com. Have a great weekend. 2 more weeks of tax loss selling. Happy holidays, and have a great end of 2018.